Good morning or afternoon, depending on where you're at. Remember to load up that chat box with all of your questions, comments, concerns about buying houses. Do you have questions about your income, your credit, your down payment, whatever it is? Make sure you put it in the chat box so we can let you know if you're on the right path of buying a house. If you don't know how to buy a house, if you don't know what it takes, you can get all your answers right here for the next hour. We'll answer your questions. We'll let you know if your scenario makes sense. We'll let you know what's going on in the market, what to expect this next couple of months, maybe even couple of years. What is the Fed talking about? What's the market like? Across the nation, there's a whole lot of different communities doing different things. Prices going up, prices going down, prices leveling out. So whatever it is on your mind, put it here in the chat box so we can help you become homeowners.
Homeowners.
What do you got for us, Finance Man?
Homeowners. Well, the markets are like erratic right now. And they're erratic, but this is kind of a good thing for the buying public at large because there's this weird spot right now where interest rates are going down, but the inventory hasn't matched it. So you're like in a sweet spot.
What's that mean? What's that mean?
So you were telling me that you priced one and they were priced like a week ago and then 3 days later it was priced at something. Give me that scenario again.
Okay, so for this particular person to get to the purchase price they wanted, we needed to buy down the rate. The cost for that rate was about $15,000. We priced it a few days later. It went down to about $9,000. So they saved $5,000 to $6,000.
Yeah, I did a pricing on one that was $500,000, and with the current interest rate, and I'll just say 7.25 originally for $500,000. They were qualified for $500,000.
Mm-hmm.
I reran their numbers about a week later. They were qualified for $540,000. $540,000. So it made a $40,000 difference. Yours was $35,000, I think.
Oh, that's not right. Yeah, in that range. What's up, Benzer Jr.? How you doing?
What's up, Ramirio? When do you think house prices will come down? No, Ramirio. There's only a few pocket areas in the country where house prices are going to just stabilize and maybe blip. But no. I think they're actually going to skyrocket up, Ramirio. I think they're going to go up pretty damn fast as soon as the pivot gets memorialized. So what is the pivot? The pivot is when the Fed Fund says, hey, you know what? We're going to start dropping rates. It's not that we're going to get 25 basis points and the whole market's going to come running and go, hey, we just dropped 25 basis points. Oh my God, what's going to happen? This one? Yeah. So that's not what's going to happen. That's not the big deal. The big deal is it's like a roller coaster. So you got a roller coaster, and let's say you have 10 cars on the roller coaster. So all this time they're going click, 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 and then they're hovering. So that was the ascent. Then there's the pause. And then when we go to the pivot, the first car will go over. That's 25 basis points. And then the next car will go over, another 25 basis points. And then the next car. And then before you know it, momentum starts happening. Once that momentum starts happening, buyers will flood the market. Like flood the market. And when they flood the market, all of a sudden, prices are going to go through the roof because we are in a housing shortage. This is not rocket science. Anybody who actually studies the numbers knows we are in a housing shortage. So Tribeca Tom says, how much for a 400K home?
I'm going to answer that. I'm going
to answer it better.
400K.
I'm going to say 400K. Each time, every time, no matter what. If you're trying to buy a $400,000 home, one thing's for sure, you'll probably get it for $400,000. Just remember, 50% of the time, I'm 100% accurate.
Yeah, so I think the better question, Tribeca Tom, is you're asking how much is the down payment on a $400,000 house? And based on the type of loan you're going to go with, it's going to have different answers, man. Different answers. So
Can you
first
say
time
1.4 million?
No, yeah.
You're coming up with 1.4.
No.
You don't see the calculator here.
First time homebuyer program. You have Fannie Mae, Freddie Mac, Home Possible, Home Ready. That's asked for 3% down. So 3% on a $400,000 house, 3, 6, 9, 12. $12,000 down payment. That's going to be your lowest down payment using a traditional program. If you go with FHA, it's going to be about $14,000 out of pocket. Okay? So either one of those are going to work for someone that doesn't own a home. FHA gives you a little bit more leniency on your credit, a little bit more leniency when it comes to buying a house. The first-time homebuyer programs are a little difficult to get involved, but Those are your minimum down payments. Or you can go with the program. If you go with the program, you might be able to get in with 0 down.
How much?
0 down.
How much?
0.
Damn, that's a lot.
So it's Rebecca and Tom. You need to give us a call if you're interested in buying a house. William Slunder. There is too many U.S. dollars out there chasing true commodities like housing.
You're correct, William. And here's the problem. It's hid behind this gigantic veil. And the veil, we don't get to see where the 1-for-1 is. It gets really complicated. Like so complicated, we're not allowed to know what our actual relation is. Not even allowed to know what the actual relation is because the Fed sets monetary policy. And the U.S. Congress does not have the ability to audit the Federal Reserve. That's a fact. So because we don't have the ability to audit the Federal Reserve, there's this giant curtain that we don't know what's going on. But the indicators and the people that make the policy kind of tell you what direction we're going to go in. In fact, when the interest rates went up, they told all the loan officers, because we're in that business.
What's that, Roses and Beyond?
They said, hey, we're about to increase mortgage rates all the way up to 8%. And we're like, no, that's crazy. You crazy little Fed man. You're not going to increase interest rates all the way up to 8%. And then we watched him. We watched him move them up, all the way to 8%. I could not believe it. I could not believe that we went up to 8%.
Only took 8 months.
It took 8 months. And now the Fed says, all right, we're done with that raise. Now we're going to go back down to 2.5%. They've said that. It's on the FOMC website. They've said 2.5%. So if you doubted them going up and then you got schooled, then maybe, don't doubt them coming down. They did say it's going to be end of 26 into 27 before we hit 2.5% Fed funds rate. But it is going to happen. And that's called the pivot. And once we start to drop interest rates, we are in the pivot. And there's some things that are coming out that are not so hot right now. Like, for instance, the jobs numbers came in. And the jobs numbers came in horrible. Like, really horrible. Like, oh my God, we could be in a recession. I think everybody knows we're in a recession. Come on, we're in a recession. However, if these numbers keep coming in, somebody just said, is the Fed holding an emergency meeting? No, they haven't actually announced it as of this morning yet. But there's a lot of really powerful people saying, hey, we could be in trouble. And the jobs numbers, there's one coming in this Wednesday. There's a few more. The meeting is September 18th for them to reduce rates. Now, the only time they have emergency meetings is when there's a real actual emergency, like, for instance, COVID. When that happened, they were like, this is going to crash the economy. You know what we should do? Let's make money ridiculously cheap. And they did. It went bloop, 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 bloop. And I remember when all this stuff started happening, we used to have loan officer meetings over, live? Zoom? Yeah, we used to have these big loan officer meetings, and we're all like, oh my God, how are we going to get through this? Oh my God. And then all of a sudden, started raining business.
Wave.
We could, I'm like, I don't know why, but I got like 10 refis and 4 purchases this week. And everybody's like, yeah, look at this. And before you know it, it's raining business. Well, if you understand economics, what they're trying to do is infuse a whole bunch of money so that when this hit happens, and they knew it was going to happen. They knew the shortage. They knew the chain line supply was going to be problematic. They knew all this stuff was going to happen. So they preempted and primed the pump prior to that. Then they had to pay the piper. And that's where the 8% came back up. So the problem is if you keep that too long, the whole thing could crash again. So are they going to have an emergency meeting? I don't think we warrant that at this spot just yet. But it sure is fun to say it. And that's why a lot of people on social media say that.
Yeah. What's up, Lenny on the go? Phoenix, Tacoma. I have a 15-year fixed refinance from 2021. How can I pay down the principal quicker? I have a 2.375.
Phoenix, Tacoma. First off, great rate. Unbelievable rate. People would not believe you if you told them you have a 2.375 rate. So this is going to be a secret, top secret, super top secret, need the cone of silence hack. on how to pay your mortgage
Everyone,
down
close your
quicker.
ears.
Nobody listen except Felix Tacoma. That's the only one who can listen. So,
Dude, you broke the screen.
I did. I'll figure it out. So, Felix, I know it's not there. Felix, here's the hack. Pay principal. That's the hack. You just pay it down. You pay principal down. You pay your principal down.
So what he means is you make your regular mortgage payment every single month. Let's say it's $3,000 a month, okay? That's principal, interest, taxes, insurance, likely. What you're going to do is you're going to take another payment. You pay that $3,000. You're going to make another payment, $100 a month, $200 a month, $300, another $3,000, whatever you want, and you're going to pay that directly to principal, okay? I'll give you a rule of thumb, just a real quick rule of thumb. If you make 2 extra payments in this scenario, that would be $6,000 per year. You'll pay it down in about 15 years. So a 30-year loan, you'll pay it in about 15 years.
It is a 15-year.
You'll take it from
14.
15 to probably 4.
No,
probably
not that much. Not that much.
Well, no,
it will,
that's all principal,
it's
man.
percentage.
His interest is little.
Yeah, it's percentage.
And the compounding factor is a lot less.
Yeah. It is a big deal if you want to shave off 2 years. Pretty simple. That's actually pretty simple. 1 or 2 extra principal-only payments. And here's the key: the banks work against you. I know that's a shocker, but they work against you. If you send in an extra payment and you go, hey, I'd like to just make an extra payment, they'll go, all right, cool. Thank you for the principal, interest, taxes, and insurance 1 month ahead. And if you don't tell them, I want this to go exclusively to principal, they will consider it an advance payment. The reason for that is they make all their money off of interest, and it is not in their best interest for you to pay it off quicker. Remember, they're in it to make money. So if you send in an extra payment, which a lot of people do, they're like, hey, I heard if you make an extra payment, the bank says, hey, thank you very much. And in the behind the scenes, they say, oh, you're ahead 1 month. Oh, this guy's great. He just pays ahead 1 month. And it doesn't affect anything till the last payment, and you didn't really do anything. But if you take that full payment and you send it straight to principal and then force them to re-amortize the loan, that's the hack.
Yeah. So here's what you're going to do, Phoenix Tacoma. Go online, and you're going to find yourself a payment calculator, and you're just going to ask, how much do I pay to pay 2 years, 3 years, 5 years sooner? And they'll give you the exact numbers based on your current mortgage payment.
If you're with New American Funding, if you're with New American Funding, it's already built into the site. And he said, yeah, I've had that happen. A lot of people have had that happen. They come to us and they go, I heard you can, reduce the loan by years if you pay your principal. No, I did it. It didn't do anything. I'm like, how did you do it? I just sent in the payment like I'm supposed to. I said, yeah. The banks are not your friend. They're not. It's a for-profit business for them. And they want you to go the full term because they build them big, giant glass buildings by you paying interest on a loan. Let me give you a little secret here. Let's just say you took a $300,000 loan out right now in 6% interest environment. 30-year, $300,000 loan. If you paid it back by the terms, you will have paid over $1 million in 30 years. Guess who gets to keep that $700,000? The bank. They're in business. And the problem is that unless you're rich, you can't do anything about it. You got to finance a house. That's kind of what it is.
Yeah. Phoenix Tacoma said I was splitting the monthly payments to 26 weeks, paying half. Would they lower my payments as the principal drops?
No, negative. The agreement was the agreement, and there's no prepayment penalty. That's the only reason you can do this, because the Dodd-Frank rule kicked in 2010, 11, 12, depending on which portion. But there's something inside of the Dodd-Frank rule that says for any conventional conforming mortgage, which is Fannie Mae, Freddie Mac, USDA, FHA, VA, for any of those, they cannot have prepayment penalties. So if you're in a conventional conforming mortgage and you pay principal, they can't punish you. But they just keep the masses naive. They just don't let them know. And unless you actually understand the system, you don't know.
Yeah, they're going to make a lot of money on everyone else, Phoenix Tacoma. They're not going to make a whole lot of money on you if you keep this path. And that 26 weeks of payments is pretty cool, man. Just make sure that when you're making those extra payments, you do note that it's only for principal because they'll apply it to your payments moving forward. Husband wife Lozano said, "I love the white in your goatee, Christopher. I dyed it this morning."
He dyed it. Yep, he dyed it. He's gonna bury it
I dyed
later
a
this
few of these,
afternoon.
too.
He's gonna bury it this later afternoon. He dyed it.
So what else is going in the market, man? What can these buyers predict coming up in the near future when it comes to interest rates based on what the Fed's putting out?
Well, first off, you and I have seen an unbelievably big spike in
unbelievably
loan
big
volume.
spike.
Loan volume. A lot of people coming
Big.
back to us and going, "Hey, remember me?" I'm like, "Yeah, I remember you. We got you qualified a year ago. I'm working on one right now from a year ago in New Mexico." And I'm like, "Hey, yeah, I remember that a year ago." They're like, "Hey, cool. Can you send my pre-qual out like right now?" I'm like, "No. Well, why not? I was qualified a year ago." I'm like, "Yeah, a lot of shit happens in a year. Do you still have the same job?"
What happened in a month?
Yeah. Do you still have the same job? I need most recent paycheck stuff. Well, why do you need that? You have that. I sent it to you. I was like, "Yeah, you sent it to me a year ago." "Oh, I got to pull your credit." "Why do you have to pull my credit?" "Well, you already pulled it." I was like, "I pulled it a year ago. I need to see your bank statement." "I sent you my bank statement a year ago." "Yeah. So I need to refresh your credit, find out your paycheck stub, check your bank, and then I can refresh everything and get moving forward." That's happening a lot. You too?
Oh yeah. Okay, so here's what happened. In the end of July, I had to middle of July, I had a borrower qualify for $500,000. About a week ago, we re-qualified them, and the purchase price went up by $60,000 because
60?
the rate went down. The purchase price went up.
60? That's a lot,
and
man.
in his area, the prices haven't changed yet.
I have a same scenario, but mine only went 40. So yours went up more. It's
Mine's
60,
bigger.
60G. 60 G's. That's what that is.
Vanessa, do you think now that the interest rates are coming down, homes are going to sell for more money?
Vanessa, yeah. It's just supply and demand. It's market. There's going to be a lot more buyers. So for every 100 basis points the interest rates drop, 1 million new borrowers enter the market. 1 million new borrowers. Now, what does that mean? If there's adequate inventory, then, okay, cool. There's a house and there's, 5 buyers, and all right, cool. But if there's not more people trying to sell their house, now you have a house and 30 borrowers. And all 30 of them really want that house. You don't understand. They'll write a cover letter. They'll take a picture of them and their dog. They'll be like, "Hey, look at, Mr. Fluffles really needs a house. And we fell in love with your backyard. Mr. Fluffles really wants to live there." And I hate to say this, but it doesn't really matter. That kind of stuff doesn't really matter that much. It's
Fluffles
cute.
gonna pay more?
No, well, if Mr. Fluffles drops an extra 10K
There
above
you go.
everybody else,
Now we're talking.
then Mr. Fluffles will probably get that house. But if Mr. Fluffles is just trying to get by on good looks, the seller is only thinking about, "Hey, how much do I get?" Now, if it's exact offer, which rarely happens, but exact offer, exact terms, exact everything, exact FICO score, exact loan officer on the other side, then Mr. Fluffles might have a little bit of sway, unless the guy hates dogs. He's like, "I'm not gonna let no shit in my yard, not even if I don't live here no more." So Mr. Fluffles can either work for you or against you, but houses are gonna go up. That's how it's gonna go.
Yeah, the good old supply and demand, guys. Supply and demand. So right now, across the nation, the median cost of a house, you know how much it costs from California all the way to New York or Pennsylvania, or pick a state on the East Coast?
Shock us.
$420,000 is the median
Where can you find a
price.
$420,000 house in California?
I have no idea, man. Do you know what? Okay, right down the street from us, about, 20 minutes, is a city called Rancho Cucamonga. You know what the median price in Rancho Cucamonga is?
$960.
$1 million.
Really? Went to $1 million?
You know what the median price in California is from top to bottom?
Tell me.
$900,000.
That's crazy, man. That's crazy.
Insane.
You know what? And listen, if we just had a loan officer that could tell us how much you actually have to make to qualify for
we have one of those?
$900,000, I'll do it.
Okay,
I'll do
I
it.
found one.
I'll do it. All right. So if you're a great file, $160. A great file. If you're a great file, I mean, you're coming in with 20% down. You have an 800 FICO and you make 160,000. You can afford a $900,000 house. Most people are not great files. Most people are coming in with 3.5% down or 720 FICO. There's a lot of things that have to factor in. So if you have a household with 2 people making 100 grand, that's a fightable file at 900 grand. You get that, but that's crazy. That's not most of America.
No.
We know because we pull credit on most of America.
And even at that income, it still hurts when you go to Costco. It
Yes.
still hurts. None of your business said, ugh, I got to get out of California. Where you at? What city are you in? None of your business?
Nunya, tell us. We're all, so I've got this,
Bad attitude?
yeah, I got a bad attitude, and
Stinky
I've
breath?
got this love-hate relationship with California because there's some really nice
We all
parts
do.
of California.
We all do.
There's some really nice parts of California. Really nice. Everything's so damn expensive. It's insane. It's absolutely insane. So,
Oscar De La Hoya.
Yep.
Oscar De La Hoya did an interview with Patrick Bet-David, and he said California needs someone else to run this country because California, he wasn't just talking about the governor, he was talking about the president. He said, because California, he said, I have a house in Beverly Hills, and the homelessness in Beverly Hills is running rampant. In Beverly Hills? I've never seen a homeless person in Beverly Hills.
I've never either.
But according to Oscar De La Hoya, they're starting to come in and take over the land.
do they like have Starbucks? They're like, hey, I'm homeless and I need a latte, chai, double flame, back kick.
I'll tell you what, man,
Coffee.
there is not greener grass in the country than in Beverly Hills.
Yeah.
Vanessa, we just closed on our first house last week. I've been watching your lives while under contract.
Vanessa, I'm glad to hear that. I hope we helped you through the process.
Christian Cox, I think, is asking, do you do commercial property?
We do not do commercial property. We can refer you, but we don't do it ourselves. I don't know the ins and the outs. If you ask me about conventional conforming loans, FHA, VA, Fannie Mae, Freddie Mac, USDA, any of those, I know the guidelines like really good, better than most on this platform, even out there.
Yeah. And then your business is in Roseville in NorCal.
NorCal. So, Northern California is a little bit strange because
The weed.
the weed, the houses are so expensive, and I don't understand how all the people are affording it. Yes, I get that it's Silicon Valley, and there's a lot of weird business things that happen there, but the houses are so ridiculously expensive. It is like crazy. If I try to do some loans in San Francisco, everything in San Francisco is $1.4 million to start. Crazy.
Yeah. Roseville, that's nice. Is that a nice area? I know you're just north of Sacramento. I just looked you up. But is that a nice area? What are the home prices going for in Roseville? Christian Cox said, loan me $10 million.
You know what? Come by. We'll do it.
Give him a call.
Yeah.
Mark Hernandez, with rates dropping, do you foresee home prices dropping due to more homes available? than buyers? Is he trolling? Is he trolling?
Mark, I like you, man.
He's trolling.
I do like
Has
you.
to be.
Mark, that's cute. Yeah, that's cute.
Straight trolling.
Yeah.
How about $5 million?
You know what? Do it.
Raj
Come on,
Binder.
let Park right here.
Thank you for sharing the live.
What's
Hey,
up?
anybody
Raj
who's
Binder.
anybody that's interested in getting a home loan, if you want to start right now, go to the link in the bio, select apply for a home loan now. If you have crap credit, there's a link there for you to fix your credit. If you want to talk about it, our phone number is also there, and it is time for a commercial.
If you need a badass loan, call a badass loan officer. If you can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the numbers on the screen. But don't call right now because Chris's phone is on Instagram and Lee's phone's on TikTok. We won't answer. After we are done with this live, we will answer. We will help you get the house. This will disappear in 5, 4, 3, 2, 1.
All right.
If we had a big cash deposit due to savings, how does that work? Okay, Lupe.
What?
I don't know. We're getting slapped again. What did I say? What did I say?
I think it was the bad breath.
Yeah, maybe. So, if we have a large deposit due to savings, how does that work? It's real simple. So you're like, hey, I want to buy $500,000 our house. You're like, okay, cool. How much you want to put down? $300,000. Okay, cool. We're gonna give you $200,000 loan then. That's how it works. If you have a big cash deposit, that's how it works. Now, if you talk with your loan officer, we'll find out if that's the best move. Sometimes it's the best move and sometimes not, depending on what you call a large cash deposit. To some people, $300,000 is a large cash deposit. I'm doing a VA home $600,000 with a $300,000 down, $300,000 loan. That is a large cash deposit. Some people think anything above 3.5% is a large cash deposit. So, if you have a lot of money, then sometimes we just hit the Fannie Mae Freddie Mac 20% and then decide whether or not it's a good idea to buy the rate down. But we also take into account the big picture of what's going to happen to interest rates over the next 2 to 3 years. This is not me predicting it. This is the Federal Reserve predicting it. That's the people who actually set the terms.
Yeah, Nana33 said she's selling her home in
Lee, Florida.
That's Lee?
Yep.
All right, Lee, Florida. Where's Lee, Florida?
Lee, I don't know where Lee, Florida is, but I know that that's the female way that you spell Lee.
Oh, okay. Robert Watson. Paying on credit card, should I pay it down fast or pay minimum every month to show history?
You take that.
Robert, here's the question. How long have you had this credit card? If you had it for years, pay that bad boy to zero if you have the cash. Pay it at least below 30%. At least. And if you can get it to zero, that'd be even better. But if it's a brand new card, like you've only had it inside of 6 months, it's irrelevant. It's really irrelevant. But if I think what you're trying to do is get better credit scores. Am I right? Because if you're trying to get better credit scores, here's what you want. A good history of on-time payments, probably 5 years or more. You want to have very low balances. Zero balances are ideal. And if you don't have that, if you can't get that, I recommend getting added to someone else's credit card that does have that history with those same terms. Because if they've had it for 10 years, making good payments, making on-time payments, maintaining zero balances, if you get added to that credit card, you get all that same history for 10 years. What? And guess what happens to your credit score?
Skyrockets. Yeah, we've seen it go up 60 points in like...
Almost overnight.
Yeah.
Almost overnight. Raj Vinder, when are you going to get your license and come work with us?
Yeah, we need to do it.
None of your business. Lots of new builds here. Median sale in 95747 worth $655,000.
Is that the Northern California person?
That is Roseville.
Roseville?
Yeah.
9, that's 655 is respectable. If we, like where we're at in the Inland Empire, which is Riverside County, San Bernardino County, I'd say average 750?
About 750.
Yeah, 750?
Yeah.
About 750. It's not uncommon to see million. We see million a lot. Once in a while, we'll see 550.
That's a deal.
That's a deal. Yeah.
Heck yeah. Raj Vinder, she said she's applying today, and then she also said she's probably talking about mattress money. She's talking about the large deposit.
Oh.
See, Raj Vinder, you need to come work with us.
Yeah, she knows.
She's a businesswoman. She got her own stuff
going.
Nana, you're talking but not interacting with your viewers. We just answered your question, Nana.
Na. Hey, hey. Goodbye.
Lupe, you're welcome. Griffin Henry, building in, what's NKY? North Kentucky?
North Kentucky, I think.
Won't close till next April. Pre-approved for 6% FHA. Will I get much lower by April?
I think by April.
It'll be lower.
Yeah, I think it'll be lower. I mean, nobody knows what the market's going to do, and what the Fed funds puts out. They don't actually dictate the mortgage interest rates. The mortgage interest rates are based off the 10-year yield. Mm-hmm. However, if you look at the last 40 years, the 10-year yield and the Fed funds rate are in lockstep. They zip up a little down, but they're like, if they go up together, they go down together because they compete against each other. Mm-hmm. So there's usually a 2-point spread on it, somewhere in between 100 and 250 basis points, which is 1% to 2.5%. There's usually that spread. In uncertain markets, it gets to the higher end. In certain markets, it gets to the lower end. That's why we've seen interest rates on mortgages drop in the last week, because there's certainty in the market that Jerome Powell is going to initiate the pivot. And there's 100% odds that this is going to happen in September.
100%
Which,
odds.
by the way, third quarter, which what we've been saying for almost 2 years now, right?
Mm-hmm. Long time.
About a year.
Long time.
We've been saying we believe third quarter of 24 is when all this stuff's going to happen.
Yeah, Robert Watson said, yes, I'm shy 13 points in the pre-approval, so that advice I just gave you should help you out. But you know what, Robert? Let's talk about it. Give us a call. Phone number's in the bio. Raj Vinder said, Chris, I would love it as a side hustle. Raj Vinder, if you side hustled real estate, you will outperform some of the hard hitters right now. I kid you not. With your work ethic, you would kill the game. And especially with the things changing with the buyers agents and their commission structure changing, A lot of them are going to freak out. Some of them are even going to fizzle out. So I think you have opportunity there. Mark A. Hernandez, how do I qualify to remove mortgage insurance from my loan?
First off, you have to know what type of loan you have, Mark A. Hernandez. If you have if you have an FHA loan and you put 3.5% down, and it happened in the last 10 years,
That's FHA. You just told me.
you're not going to get rid of it.
Why not?
Never, no way, no how,
Are you serious?
no way.
You must be kidding.
So, FHA loans are mandatory MI if you put 3.5% down. If you put more than 10% down, it will fall off in 11 years automatically.
What does FHA stand for?
Federal Housing Authority. You respect my authority. So if you put 3.5% down or anything less than 10%, that 0.55 MI or 0.50 MI is going to be for the life of the loan. The only way to get rid of it is to refinance out of it into a Fannie Mae or Freddie Mac and then qualify that way.
Wow. What if you got it in like prior to 2013?
If you got it prior to 2013, he's probably not on here because those people don't get on TikTok.
Are you saying those are senior citizens?
Something like that, yeah.
That was only 11
Yeah.
years ago.
It does fall off. But it wouldn't be 0.55. It would be 0.85 or 1.35.
It was a lot. That was a lot of money back then.
Yeah.
None of your business. The million plus are definitely here, but all the new builds in former AG land is crazy. Is that agricultural? Is that what you're talking about? None of your business. Griffin Henry, Northern Kentucky is correct. Nice work, boys. Ran out of characters.
I got it.
Very
Appreciate
tricky.
you.
I like that,
Griffin Henry. We're here for you.
You
By
are.
the way, we can do business in all 50 states. You know
How
how
many?
many? 50.
Where?
All of them.
Oh, nice.
That's pretty good, yeah.
What about Alaska?
Yep, that's a state.
What about Hawaii across the ocean?
That's a state. It's
What
a
about
blue
Florida?
state, but it's a state. Florida's a red state.
About New
yes.
York, it's very tough.
New
Most
York,
banks
it's
don't work there.
weird. Yeah, but we could do New York. Yeah.
All right.
It's a blue state, but theoretically kind of going red.
So any one of you guys in any one of those states,
Anyone.
screenshot this. I'll give you a couple more seconds, and then it's disappearing.
Bye-bye.
You're welcome, Robert
Bye-bye.
Watson. You're welcome. Griffin Henry. Now
FHA, yep.
Now I can lock the rate at some point, but not sure when, and not sure if I want to keep gambling. I like that statement.
Yeah, Griffin Henry. So here's kind of a rule of thumb. Okay, I'm gonna pull the shades back, show you what's behind the curtain, and clear up a lot of stuff for you.
Behind the curtain,
Griffin Henry.
man.
Here's what's gonna happen. Okay.
Some adult stuff.
So let's
going
just
on
say
here.
you lock today, or last week, or even next week. Okay. And you're like, hey, I think I got a great rate. And you're gonna call us and you're gonna say, hey, Chris and Lee, did I get a great rate? And we're gonna go, I don't know. I really don't know, because great rate is relative. And then you're gonna say like, do you think I'll refinance in the future? And then I'll say, that one I do know. That one I absolutely know. So if the Fed reduces from 5.25 all the way down to 2.5, this is what they're saying on their website. That is a 300 basis point drop. 300 basis points. So anybody that locks in right now at 6.5, 6.25, 7.25, anything. If you're wondering if you're going to refinance in the future, let me clear up the confusion for you so that there's no confusion. You're going to refinance. You are going to. It just makes sense. You do not want to give the bank any more money than they need. You do not want to give them any more than you have to. And every single time it drops a certain amount of basis points, you are going to refinance. So, if you know that, that means that you should use that knowledge as you're locking today. Because let me give you, so let's just say, hey, I want to lock my rate and it's going to cost me $7,000 to lock that rate. All right, cool. Not uncommon. We see it all the time. $7,000. The next thing I'm going to do is I'm going to run a scenario that says, how much money do you save every month? And after I run all those numbers and crunch all that kind of stuff, I'm going to go, cool, you're saving $100 a month. Oh, that's great. Yeah, but it's math. If I'm saving $100 a month, how long before I get to my break-even point of $7,000? Well, that's 70 months. How many years is 70 months?
6, almost 7.
So, if I put $7,000 down to buy the rate and I saved $100 a month, my break even is 6.5 years, almost 7 years. So, if I'm gonna wait that long, wait a minute. According to this, we're gonna drop 300 basis points by the end of 25, beginning of 26, 27, which is like 2 years from now. But you have to wait before you break even 7 years. Does that make sense?
No, that math don't math.
It ain't mathing. The math is just math. It really is just math. So now that you see that and you go, maybe I shouldn't spend the $7,000
I wouldn't.
to buy my rate down because it takes that long to break even.
I'd buy rims.
Would you? Spinners?
7Gs?
Spinners?
Buy some nice ones.
Yeah, pretty good. Yeah. So yeah, we're here for you.
All right, Griffin Henry, good question. Thank you very much. None of your business is laughing. You said something funny, I guess. Robert Watson said, great advice and comedy. I love it.
Robert, we are here for you, trying to be funny.
Raj Vinder, LOL, my first home was in 2013, but the damn loan company said it won't drop.
The damn loan company?
Damn. D-A-M-N.
Oh, damn, not Democratic Loan Company.
No. What company is that?
I don't know.
All of them with their DEIs.
Yeah, I know.
Team Sanchez, you guys rock.
We appreciate you, Team Sanchez. We are here for you guys. We are trying to help you get a house in 2024 and 2025, 2026, and whatever.
Man.
And quite frankly, make big fat commissions while we do
plan
it.
on staying in this business.
Yep.
Then your business said, yes, AG equals agricultural.
We're here for
You're
you.
reading between the lines. Team Sanchez paying down a few debts, calling you soon.
And we're going to get you a house soon, Team Sanchez.
Yeah, Rajvinder said, if it's worth it, can you buy down the rate on a refi? Now we're talking.
Rajvinder. Yeah, but it's the same math. It really is the same math. Because you have to figure out, because you're like, how much can you spend to buy a rate down? I can tell you, he spent, how much?
20 G's.
I spent, I think it was 22. He spent 20 to buy our rates down. But we kind of understood the market because we're in the business. And they're like, hey, and we don't get very special treatment. We're like, hey, the rate was like 3.5%. I'm like, hey, 3.5%. How much to get it into 2.75? $22,000.
Oh.
But I have 2.75. And I can afford it. Shit. I wrote the check for 22 G's. He did the same thing. So because we understand how this works. Can you buy it down? Yes, but it has to make sense. And by the way, once I get on to 2.75, I'm never refinancing. I'm not taking money out. I'm not HELOCing it. I'm not doing anything. This is staying for the life of the loan because that's the cheapest money I think I'll ever get.
Yeah.
So, does it make sense to buy it down when you're refining? Yes, sometimes. But if you know that you're going to go, hey, I was at 7.25 and at 6.25, it makes sense to refi. Why? Because I save $300 a month. All right, cool. How much is the refinance? It cost me $3,000. All right. How long before I break even? 10 months. Maybe a little bit more after fees and stuff. So, all right, cool. But you know what the loan officer wants you to do? They want you to go from 7.5 and refinance at 6.5 because they make 5 to 10 grand. Then they want you to refinance at 5.5. Why? Because they make 5 to 10 grand. Then they want you to finance it 4.5 because they make 5 to 10 grand. So the problem is you start the clock over every single time back to 30 years. That's the real problem.
Yeah. So doing a refinance right now may not be the best move, but I'm going to give you something, my opinion, okay? He might disagree with me, and a lot of people out there might disagree with me, but I'm going to share this information. So FHA and VA have something called a streamline, okay? Streamline is not an actual refinance. All it's really doing is taking you from wherever you're at and adjusting down to wherever the rate is at currently. Now, if you're going to refinance in 2026, maybe 2027, that's 2-3 years from now. Okay, that's 2-3 years of higher payments. So what you could do is a streamline if you have an FHA or a VA between now and then when you hit that marker in 2027, do a full refinance to get the best low rate available. So here's what a streamline does: it just takes you wherever you're at, down to whatever the current rate is, but the fees are wrapped basically into a mortgage payment. So what that means is you're just going to keep making your same mortgage payment, and then when the new one comes in, you pay less, and you get to take advantage of the lower rate. You get to re-amortize to the whatever your loan balance is with the new payment and save some cash. So is it going to be a huge drop? No, probably not. So let's just say you had an 8 and now you can get a 6.5. Okay, you might save a couple $100, but is that couple $100 worth it to you? And if it doesn't really cost you anything out of pocket, I think it's a smart move. What do you think?
I think so.
Okay, doesn't disagree.
Yeah.
Griffin Henry, cool guys. Hope you have a nice. Hope it stays nice and you're busy throughout the year. Thanks.
We appreciate you, Griffin Henry.
Trey, which is easier to sell in your opinion, a condo or a home?
Same. Market's the market. Market's the market.
Right.
There's more issues with the condo because you have HOA fees and there's a bunch of extra fees depending on where you're at on a condo, but it's factored into the market.
Yeah.
So the market's the market. If you price it right, your market will move at the same speed the market moves at.
Yeah. Some people love houses, some people like condos. Rajvinder said the PMI won't drop. I don't know what that means, Rajvinder. What are you talking about?
If you do a streamline, it won't drop. It won't drop.
Yeah.
But there's kind of a little bit of a benefit if you did your FHA within, I think it's the last 3 years. We get to prorate the UFMIP. And a lot of people don't know this, but if you do an FHA loan, there's something called UFMIP, upfront mortgage insurance premium. That's on all FHA loans, and it's 1.75%. They just tack it on nice and quietly. Why? Because FHA wants it. I don't know the rules. So if you did your refi within a certain period of time after your original finance, they go, yeah, we're not going to give you the whole 1.75 UFMIP. We're going to prorate a portion of it so you pay a little less. So there's that.
Scholarship Mogul said, hey. And then does one come out of pocket on a streamlined refi? Yes, you typically do. And we can typically, depending on how it falls with your closing, is we can just make that another mortgage payment. So like I said, you just keep making mortgage payments until you get the new one, and it's less. But yes, there is some out of pocket. It's not like a regular refinance. It doesn't work for everybody, guys, because it has to make sense. We have to actually fill out a form and do a test to have enough savings. And if you can have enough savings, you get to drop your payment. If not, you just keep making that same payment. No harm, no foul. But Scholarship Mogul, do you help with scholarships? Because if so, shoot me a text because I'm going to be walking down that path pretty soon.
You're going to take a scholarship to go to school?
Me. Oh. Not for me.
All right, cool.
Mark A. Hernandez, my home value keeps dropping. I assume too many buyers and not enough sellers because we have low rates. That's where my prior comment came from.
Oh, Mark. There's a few markets that were oversold. I'll give you a few of them. Austin, Texas, oversold. A lot of people went in there and they're like, hey, we need to build a whole bunch of properties. And they did. But the market got a freeze on it. And then all of a sudden there's too many properties. What happens when there's too many properties? It starts to come down. Then employment started dropping. These people can't afford it anymore. So the prices in Austin, Texas started to come down. However, across the country, they've gone up. In fact, National Association of Realtors just said that we have the highest home price ever recorded, like last week. Highest across the nation home price ever recorded. But there are some markets, Florida. There's a lot of markets in Florida. So Austin is unique in Texas because Austin's in a little bit of a blip. But Houston and Dallas, they're on their way up still. The bigger cities in Texas, save Austin, they are going up. And even the suburban areas around the metropolitan areas, those are going up too. We closed the loan not that long ago, up. But Florida, there's a lot of them in Florida where they're creeping down. The way you find out is you find out DOM, days on the market. Some market, I think the average day on the market right now in Florida is 90. That's a long time. Most areas, most markets are 30 days on the market.
Rajvinder, my FHA is a streamlined. When I refinanced back in the day, I cut the years down to 25 years. The rate is like 3.2. There was no out-of-pocket cost. I bet you there was some out-of-pocket cost, but they just made that a mortgage.
Yeah, they made it sound like there wasn't. Yeah. They do that. That's what
no one does this stuff for free.
Yeah, loan officers are not always. They don't tell you everything. They don't tell you everything. We kind of make it a rule that we do. That's our brand. We're like, hey, is it a good idea to refinance now? I say, probably not. You should probably wait till 27. But if you refinance now, you will save some money monthly. And yeah, okay, cool. So when's the best time to refinance? When we hit 2.5%, you buy it into the dirt. You do it one time. However, if you absolutely want to refinance, I'll do it for you. I will. I'll do it. Yeah.
He will. I've seen him do it. Cruise with us. Thank you for the love. Rajvinder said she's touring a home today.
You go buy another house?
This woman is on fire.
That's crazy.
She is on fire.
That is crazy awesome.
The rest of you that want to buy a house, go to the link in the bio, select apply for a home loan now. You can do it while you're on the phone watching us, literally. Or you can call us. Our phone number is there. Or if you're gearing up to buy a house, but you know you have crappy credit, click on the link that says fix my credit and get that process started. And guess what?
What?
Time for a commercial.
Hey, if you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at the numbers on the screen. But don't call us right now because Chris is on Instagram and Lee is on TikTok. We cannot answer right now. However, we're about to end the live. And because we're ending the live, you could call us and we will help you get the house. Bye.
All right, you ready?
Yeah. You know what? We appreciate you guys. We have been Chris and Lee. We are out.